Estate from period to period. Month-to-month rental. An estate is the ownership interest or claim that a person has in real property. There are two types of overall estates: freehold estates and less than freehold estates. Freehold estates are owned and less than freehold estates are rented or leased. Less than freehold estates fall into two basic categories: estate for years and estate from period to period. Estate for years is a rental property that has a lease with a specific term. An estate for years does not have to be for a lease term of a year, but for a term specified by a lease. An estate from period to period is the default term of 1 month or month to month. Periodic tenancy is a synonym of estate from period to period, and the idea is that the requirements of a rental agreement renew from period to period without a re-signing of the lease, and that length of time is month to month. An estate from period to period is a month-to-month rental. Synonyms: periodic tenancy, month-to-month rental. Antonyms: rental for a term specified by a lease. Related words: estate, less than freehold estate. Commercial bank. Most diverse and flexible of lenders. Commercial banks are the most diverse and flexible of lenders. Commercial bank loans include real estate loans, home equity loans, business loans, and construction loans. Construction loans are short-term loans, usually during the life of the building, typically 6 months to 42 months. Construction lending usually carries a higher interest rate and often is not fully amortized, but is partially amortized with a balloon payment due at the end of the term. A takeout loan is what is used to convert a short-term construction loan to a long-term loan because the new loan, quote, takes out, end quote, the short-term loan. Borrowers will often obtain a letter of pre-approval for the takeout loan in advance of starting the project, so they know that long-term financing will be in place. Long-term loans may be 5 years to 30 years. The commercial lender or bank is the most diverse and flexible of lenders. Vacancy factor, parentheses, BF, and parentheses. Loss of income due to rental property or unit not rented. Vacancy factor, parentheses, BF, parentheses, is the percent of units of an income property which are vacant or not rented. In an apartment building with 20 units, has 2 units not rented, the building has a 10% vacancy factor. The vacancy factor is expressed yearly unless noted. A 10% vacancy factor in a 20-unit building over a year's time means that an average of 2 units remain vacant for the year. Commercial property is measured in square feet, so a 10% vacancy factor of a 20,000 square feet strip mall would be a unit of the size of 2,000 square feet remaining vacant throughout the year. The 2,000 square feet does not have to be the same unit, but can be an average of the square footage which remained vacant. Vacancy factor is important because it subtracts from the total rent. If a 20-unit building generates a maximum of $20,000 per month in gross revenue, then we have a yearly potential gross revenue of $240,000. A 10% yearly vacancy factor would reduce our gross revenue by $24,000, parentheses, 0.1 times 240,000, end parentheses, which now means we have only taken in $216,000 for the year. As property owners or investors, our goal is to maximize our return, and therefore we are very interested in the vacancy factor of our owned or invested in properties. Window security bar disclosure. Home with window security bars can be dangerous. A home which has security bars over its windows requires disclosure when listed for sale. More specifically, the presence or absence of the safety release mechanisms on the security bars over the windows is what the disclosure focuses on. Why? Because security bars not only keep intruders out, but can lock family members in during an emergency. It shouldn't be surprising that window security bars might cause restricted egress during emergencies like a structure fire, for example. Window security bars present a very real danger to residents, and therefore a disclosure of the release mechanisms is required. Due on sale clause. Total loan value due in full. Conveyance. Upon conveyance. A due on sale clause or loan acceleration clause is typically part of a mortgage or trust deed document which requires a loan to be paid in full if the property is transferred or conveyed. Why? Because the loan agreement is with the current owner, not a new owner. Without such a clause, a property could be sold, and the lender technically has no security for the loan it made to the now former owner. The due on sale clause is one of the reasons land contracts don't work well when financing exists on a property. The moment a land contract is executed, parentheses, signed, end parentheses, the existing financing with a due on sale clause makes the loan due in full. Synonyms: acceleration clause, alienation clause. Assumption clause allows a buyer to take over an existing loan on a property. An assumption clause is a clause in a real property loan agreement that allows the buyer to take over the loan in the event the property is conveyed. This used to be very common, but is not common today. In fact, most real estate property loans now have a due on sale clause or acceleration clause, which is the opposite of an assumption clause. The due on sale clause or acceleration clause requires that a loan be repaid in full when and if the property is conveyed. An assumption clause is a clause in a property loan which allows the buyer to take over the loan. Antonyms: due on sale clause, acceleration clause. Related words: mortgage, trust deed. Entity: something considered to be a person, like a corporation. An entity is another name for a being. It is alive unto itself. A person files his or her own taxes, and an entity, like a corporation for example, files its own taxes too. A sole proprietorship is a person engaged in business. A corporation is a separate entity that is engaged in business. A corporation may have a president, secretary, and a treasurer, but those people are not the corporation. They merely work for the corporation. These people may file the taxes on behalf of the corporation, but they are doing so on behalf of the corporation. Those people can all leave, and the corporation lives on, until it is closed by someone who could be the state or non-compliance with taxes or other filing issues. Closing a corporation is called dissolving the corporation. A corporation is not closed, it lives on forever. If a corporation is not closed, it lives on forever. This is the nature of an entity, a being unto itself which has the characteristic of living forever, once open, until closed. Cash reconciliation statement. Brokers required to log all cash in and out. All money moving in or out of a brokerage is important to record, but because cash has no paper trail, it takes on an even greater importance. All cash transactions are to be recorded to create a paper trail. The cash reconciliation statement is the document that remains in the office. Other paperwork, like receipts and bank deposit slips, add to the paper trail. A cash reconciliation statement is a single document which records cash in and cash out transactions. Statute of limitations. Statutory time within which action must be taken. Time heals all wounds, or so the saying goes. Time has and will sweep even the most egregious acts clean. The concept is alive and well in our legal system. If a certain amount of time passes and no action is taken, then no action may be taken. The law sets down many time limits within which, if no action is taken, then no action may be taken. If the statute of limitations has expired, then no legal action may be taken. Offeror, party making an offer. The offeror is the party making the offer. The offeree is the party receiving the offer. The offer makes the offeree aware that the offeror would like to see if a meeting of the minds can be reached. The offer and the counteroffer represent the process of negotiation. A counteroffer is the rejection of an offer with a new offer. The offerer is the party making the offer. Antonyms: offeree. Related words: offer, meeting of the minds; counteroffer, negotiation.